Hey Daisy, do you have any idea about your lesson for today?
I think we will be discussing a new chapter.
Oh, okay. Alright, thank you.
Good morning, class. So let's start this wonderful day with a prayer. Miss Bonsato, you, Miss Bonsato, come here. You lead the prayer.
Let us pray. In the name of the Father, and the Son, and of the Holy Spirit. Amen. I will continue, O my God, to do all my actions for the love of you. Saint John Baptist de La Salle, leave Jesus in our hearts. In the name of the Father, of the Son, and of the Holy Spirit. Amen.
Alright, thank you, Miss Bonsato. So for today, our new lesson will be to complete accounting cycle.
Ang susunod na programa ay rated PG. Patnubay at gabay ng magulang ay kailangan sa mga batang manonood.
Our lesson for today is to complete accounting cycle, wherein we will be tackling each step involved in this process and its components. Let us first define the accounting cycle, which is the life of a business divided into accounting periods of equal length. A standard sequence of accounting procedures is repeated for each period. These uniform procedures done to accomplish the accounting process are referred to as the accounting cycle. This can be classified into two parts, namely the recording phase and the summarizing phase, wherein the former includes analyzing the transaction, journalizing, and posting, while the latter involves an adjusted trial balance, adjusting entries, financial statements, closing entries, post-closing trial balance, and reversing entries. But remember, the post-closing trial balance, reversing entries, and the worksheet are optional. In order to make this discussion easier to understand, I will be providing you a problem related to the topic. By using this problem, we would be able to provide the solutions needed by the business to function efficiently. The business problem that we will be solving is that of Daisy Bonsaro's car wash. She opened Daisy's car wash July 1st, 2018, and she hasn't been able to start encoding her transactions for the month, which is why she's having a hard time deciding on what her business needs in order to grow. So for step 1, identifying and analyzing the transaction. In this step, Daisy needs to identify and analyze the transactions to be recorded through the business documents. Business documents provide the data concerning the parties involved in the transaction, the exchange made, the date, and the money value of the exchanges. Journalizing is also a part of this process, wherein the transactions are chronologically recorded in a book called the General Journal. The first book of account, which is the journal, is a daily record that shows the debit and the credit effect of each transaction. A general journal entry consists of the transaction date, the accounts, and the amounts to be debited and credited, and a brief explanation of the transaction. A simple journal entry consists of one debit and one credit, while a compound journal entry consists of two or more debits or two or more credits. In analyzing the business documents or transactions, the accountant determines the impact of the transactions of the financial position as represented by the equation assets equals liabilities plus equity. These are the following transactions that were completed during July that must be journalized. July 1, she invested 8,000 pesos cash in business. Also in July 1, she purchased a used truck for 6,000 pesos, paying 3,000 cash and the balance on account. So the other 3,000 is on account. On July 3, purchased cleaning supplies for 900 pesos on account. July 5, paid 1,200 pesos cash on 1-year insurance policy effective March 1st. On July 12, she billed customers 2,500 pesos for cleaning services. On July 18, paid 1,000 cash on the amount owed on the truck and the 500 pesos on the amount owed on cleaning supplies. On July 20, she paid 1,200 peso cash for employee salaries. On 21st, she collected 1,400 peso cash from customers billed on July 12. On 25th, she billed customers 3,000 pesos for cleaning services. And on the 31st, she paid gas and oil for a month on a truck for 200 pesos. And she withdrew 600 peso cash for personal use. So this is how it would look like after it's been journalized. So basically, in journalization, the amount of debit and credit should be equal, and there should always be an explanation for every transaction. So these are the next journal transactions. For step 2, posting the general ledger. The next step that needs to be done is posting to the general ledger. This is the process of transferring the information found in the general journal into the book of final entry, known as the ledger, also known as posting. The general ledger, often called simply as the ledger, is a group of accounts that summarizes the increases or decreases of individual accounts. Before posting each transaction, ledger accounts use the T account format to display the balances in each account. Each journal entry is transferred from the general journal to the corresponding T account. The debits are always transferred to the left side, and the credits are always transferred to the right side of the accounts. An account is the accounting device used in summarizing the effects of transaction of each asset, liability, equity, revenue, and expense. The accounts used by a particular entity are usually expressed in the form of chart of accounts, which is a listing of all the entity's general ledger accounts in a systematic form. This is Daisy's car wash chart of accounts. While these are the transactions after they have been posted. Step 3 is prepare the trial balance. After posting the transactions to the ledger, Daisy must prepare the trial balance. It is a list of accounts found in the ledger, together with the account's balance or total. Every account in the general ledger will have either a debit, credit, or zero balance. The trial balance prepared at this time is often called the unadjusted trial balance because account balances do not yet reflect adjustments. It is prepared at the end of every accounting period after all transactions for the period have been recorded and posted to the general ledger. The trial balance is a control device that helps eliminate accounting errors. When total debits do not equal total credits, the trial balance is out of balance. This condition alerts the accountant that errors have been made. On the other hand, if the total debits equal total credits, the trial balance is said to be in balance. However, this condition does not necessarily signify the absence of errors. For example, the trial balance does not indicate the failure to record the transaction or the recording of the transaction in the wrong accounts. The common errors during the making of the trial balance are transposition, transplacement, and error of omission. This is how a trial balance would look like. So as you can see from this example, the sum of the debit and the sum of the credit are equal. Step 4 is the preparation of the worksheet. After preparing the trial balance, Daisy must start working on the worksheet. It is a multi-column sheet of paper that an accountant uses in compiling and summarizing the information necessary for the preparation of the financial statements. It is not a formal statement as it is only a tool of an accountant in the preparation of financial statements. So there are two basic forms in preparing a worksheet. It is 10-column worksheet and 8-column worksheet. The accountant prepares a worksheet at the stage of the accounting cycle when it is time to make adjustments and prepare a financial statements. A worksheet facilitates the preparation of financial statements by, first, providing a place where adjusting entries can be made informally before they are journalized and posted. Second, providing an orderly means whereby each account can be classified according to the financial statement in which it will appear. And third, providing a balancing mechanism that helps to uncover accounting errors. The balancing figure in the worksheet is the net income or net loss. This is how a worksheet would look like. So in the worksheet, first you need to put the heading. And after that, you should put the account titles on the left side. And under that, the total. Under the first total are the accounts for adjustments. And under that is the total. And under that is the net income total. So basically, you're just gonna put all of the amounts that were used, either in the trial balance, adjustments, adjusted trial balance, income statement, or the balance sheet. And everything should be balanced so that we can move on to the next step. And that is step 5, journalizing and posting the adjusting entries. After preparing the worksheet, Daisy needs to journalize and post adjusting entries. These entries are made at the end of every accounting period in order to split mixed accounts or to bring the accounts up to date. This allocates revenue and expenses between current and future periods. Moreover, every adjusting entry affects both a real account and a nominal account. Under the cash basis of accounting, revenue is recorded only when cash is received, and expenses are recorded when paid in cash. In contrast, the accrual basis of accounting requires recognition of revenue when earned and recognition of expenses when incurred. So the generally accepted accounting principles require the use of accrual accounting. Accordingly, adjusting entries are necessary for a fair and accurate measurement of performance and financial position on the accrual basis. The following items normally require adjusting entries: ending inventory, doubtful accounts, depreciation, prepaid expenses, accrued expenses, deferred income, and accrued income. Daisy's adjusting entries come from the following transaction. The first one is earned but unbilled fees on July 31 worth 1,100 pesos. The second one is depreciation on equipment for the month was 200 pesos. The third one is 1/12 of the insurance expired. The fourth one is an inventory account shows 600 pesos of cleaning supplies on hand on July 31. And the last one is accrued but unpaid employee salaries for 500 pesos. So basically, these are the transactions that were not recorded from the initial entries, but these transactions should be acknowledged so that it can be more accurate. After acknowledging these transactions, it's time to make the adjusting entries in order to correct the accounts and the amounts that were not previously acknowledged, and they usually look like this. So basically in this page, it is the adjusting entries journalization, and these are the updated general ledger. So for step 6, it is the financial statements preparation. The next step is the preparation of the financial statements, wherein the statement of financial position, income statement, statement of change in owner's equity, and a statement of cash flows are prepared to provide useful information to parties interested in the financial information of the business. The income statement, also known as a profit and loss statement, or the statement of revenue and expense, primarily focuses on the company's revenues and expenses during a particular period. So this is the income statement. The statement of owner's equity is a financial statement that reports the changes in the equity section of the balance sheet during an accounting period. In other words, it reports the events that increase or decrease the stockholders' equity over the course of the accounting period. And this is the statement of owner's equity of Daisy's Car Wash. The statement of financial position, often called the balance sheet, is a financial statement that reports the assets, liabilities, and equity of a company on a given date. In other words, it lists the resources, obligations, and ownership details of a company on a specific date. And this is the balance sheet. And the next step is step 7, journalizing and posting closing entries. After financial statement preparation, it is the journalizing and posting closing entries, which is made at the end of an accounting period after adjusting entries. And financial statements have been prepared for the purpose of closing all nominal or temporary accounts. To close an account means to reduce its balance to zero. Closing nominal accounts is logical because they measure activities that have occurred during a given period of time. At the end of an accounting period, nominal accounts have served their purpose. Thus, their balances must be reduced to zero so that the new nominal accounts can be used to measure activities in the next accounting period. Well, actually, nominal accounts are temporary equity accounts. Accordingly, their balance may be transferred directly to an equity account during closing. However, most accountants transfer nominal accounts to a clearing account known as income summary. The income summary account summarizes the net income or net loss for the period, and its balance is ultimately close to capital in the case of a proprietorship or retained earnings in the case of a corporation. This is the illustration for preparation of closing entries in a merchandising or trading entity. Firstly, the adjusting entry for the ending inventory is reconstructed to know all times affecting the income summary account. Debit, merchandise inventory end, and credit, income summary. To close all nominal accounts with credit balances, you should debit sales, interest income, rent income, gain on sale of equipment, purchase discounts, purchase returns and allowances, and credit, income summary. The second one is to close all nominal accounts with debit balances. To do that, you should debit income summary and credit merchandise inventory beginning, purchases, freight in, sales discounts, sales returns and allowances, sales salaries, and other expenses. At this point, the balance of the income summary account is extracted. This balance represents net income or net loss. If the income summary account has a credit balance, it represents net income and is closed as follows. For proprietorship or partnership, it should be debit income summary and credit capital account. If the income summary account has debit balance, it represents net loss and is closed as follows. Debit capital account and credit income summary. And in the case of proprietorship or partnership, drawing accounts are directly closed to capital accounts as follows. Debit capital account and credit drawing account. For step 8, prepare and post-closing trial balance. Next is the preparation of post-closing trial balance, which is simply a listing of general ledger accounts and their balances after the closing entries have been made. This consists entirely of real or permanent accounts. The main purpose is to provide evidence that equal debits and credits exist in the general ledger after closing. Thus, the post-closing trial balance ensures that the closing process has been performed correctly. This is not a required step in the accounting process. So here is the post-closing trial balance of Daisy's Car Wash. So for step 9, or the last step, is the journalizing and posting and reversing entries. Journalizing and posting and reversing entries, which are made at the beginning of the new accounting period in order to transfer all accrued and prepaid items established by adjusting entries to the nominal accounts that are to be used in recording transactions during the new period. These are called reversing entries because they are the exact opposite of certain adjusting entries made at the end of the preceding period. Doesn't mean that the adjusting entries reversed are unnecessary or inaccurate. Its sole purpose is to simplify the recording of certain kinds of recurring transactions. So these are the adjustments normally requiring reversal at the beginning of the new period. First one is accrued expenses. In order to do this, you have to debit accrued expense and credit expense. Second one is prepaid expenses. If the expense method was used in the recording, then it should be debit expense and credit prepaid expense. Third one is the accrued income. Debit income and credit accrued income. And the last one is deferred income. If the income method was used in recording income, then it should be debit deferred income and credit income. Alright, that's all class. Do you guys have any questions? Please let me know.
Sir,
You. Question?
I have a question about which comes first. Is it the recording of closing entries or the recording of reversing entries?
Yes sir, me too. I'm still a bit confused with the sequence of events of the accounting cycle.
Oh, okay. Thank you for bringing that up. To make things easier for you, I actually prepared a song to make this lesson much easier to understand. So sit back, relax, and enjoy. So
So there are 9 steps to complete the accounting cycle. Wait and listen, I'll explain it, make it viral. The first one is analyzing and journalizing. AJ, remember that for the acronym P is posting the general ledger, often called simply as the ledger. This step summarizes individual accounts, transferring the journal to the T accounts. After posting the transactions, think and look back, make sure it's balanced. Wait before all the other actions. The next step is preparing the trial balance.
D, that is the acronym. Put it in your mind, remember it the maximum. Debit and credit, just know where you headed. Every account must have an equal balance. So the fourth step is preparing of the worksheet. Not a formal statement, but accountants need to use it. There are 2 forms for preparing the worksheet. 10 column, 8 column, yeah, that is it. W, remember that is the acronym. A, adjusting for accurate measurement. Revenue is recorded only when received. Wait, slow down, I might have overachieved. F is for financial statements. Preparing it might give you an entertainment. Wait, is it over yet? Nah, we have 3 more from the alphabet. C, that is for closing entries. There is an account known as income summary. P is for post-closing trial balance. It is not required though, it makes it balanced. Lastly, there is reversing entries. I'll make this short so that it won't be lengthy. R, that's what you call it. Accounting's not hard, yeah, I admit it. AJPTWA FCPR, that is it. Accounting process, that is everything. Yeah, let's go.